Crypto is seeing red while TradFi is reacting positively to some overhyped CPI numbers. It's good to be back with you all today. I'm excited to talk about that and much more on today's episode of Money Never Sleeps. Welcome back to Money Never Sleeps. As we get going today, do us a favor, hit that like button, subscribe to the channel. Nothing Kevin or I say is financial advice. Do your own research before making any buys or sells. We got the niceties out of the way, Kevin. Let's dive into it, man. We got a CPI print earlier today. We saw a crypto pullback begin over, it pumped into the weekend and then it started to come back down. Where do you want to start? Because I think there's a bunch of different ways that we can attack this, and we got a lot to go over today.
Let's talk about just CPI, and then we'll get into the crypto pullback because I really want to get your take on it. It sounds like we're going to have a fun conversation from what I got before the show.
Yeah, so CPI print came out today. We had on the headline number 3.1% year over year, 0.1% month over month. Expectation was for no increase. That was, last month there was no increase. We're down 0.1% on the yearly. So previous month was 3.2% year over year. Now we're at 3.1. On the core number, so excluding food and energy, we are glued to 4%, double what the Fed wants to get us to. We are seeing no progress there. The move in headline was due to energy and gas being down. And gas is taking oil's taking a big old hit. Now, if we look, however, on the core numbers, because sometimes, there are times where people will disregard the headline number because it includes food and energy. It's all about what fits people's narratives with what they want the numbers to show, right? Like, we want the numbers to show, like, what is going on, what is impacting consumers, and what's going to impact the markets. And the positive effect of the prices of energy going down are great. They cannot be understated. However, when we look at a little bit deeper in the numbers, especially on the core side, and we see things like medical services being higher, transportation services still being at 10% year over year, shelter still at 6.5% year over year. That's fucking nuts, man. Like, the rent, mortgages, if you can get a mortgage right now, they're fucking crazy, and they're continuing to eat into people's discretionary spending. We got the holidays coming up. We've talked ad nauseum about the buy now, pay later bullshit and how that's going to fuck people in the end. But these CPI numbers, like, I'm sorry, they're not getting me all hot and bothered the way it is for the rest of the market, because I just don't see this great progress. Like, yeah, progress has been made. It couldn't have gotten much worse. It's come down considerably. But the core number, which we know the Fed looks at, is still double the expectation. If you don't think that Jerome Powell is going to bring that up tomorrow, you are out of your mind. And I think we're going to see, once again, a skip in the rates. They're not going to increase them again, but I think Powell is going to be really hawkish tomorrow. And I don't think the markets are going to like it, because I think he's going to leave. I think he's going to bring up the fact that inflation is showing itself to be sticky, especially on the core side, and leaving it open to more rate hikes. And if you look, like, I'm looking right now at the Fed funds probabilities, no one is pricing in a rate hike right now. It is at like 1% chance that we see another rate hike. And if they get another month reading, if in January they get a reading and it shows, because there's a meeting at the end of January and then not again until March. But if they get another PCE that is sticky, another CPI that is sticky, you bet your ass that they're going to bring up the thought of having to raise rates again, especially if nothing is broken in the markets. We haven't seen anything fall apart quite yet. And if that continues to be the case and we see more inflation data that isn't showing progress, because they've been stuck in place for fucking months, like month after month after month, they've just been stuck there. And everyone thinks that's a fucking good thing. It doesn't make a goddamn bit of sense, Kevin.
What date is that? What date is that meeting in January for the FOMC? Does it say?
31st of January.
31st?
Yeah.
Okay, interesting. We know that the Evergrande stuff comes out January 29th. So I'm trying to see if there's any
official Bitcoin ETF between January 5th and 10th. I'm sure they'll delay it again.
I'm going to guarantee you
yeah.
that we'll never get that as long as fucking Tether is. We'll get to Tether because again, there's so much to talk about when it comes to fucking Bitcoin and all that bullshit. But right now, everything that's happening in terms of the prices of inflation going down, that is all demand driven, right? However, housing, shelter, stuff that people can't necessarily afford, still really elevated. Also because these rates are so significantly high that it makes no sense for people to be borrowing money. It also makes no sense for the banks to be borrowing money to people or lending it to people if they know that they're probably not good for paying it back, right? So it's going to be it's kind of that tricky situation. But yeah, it seems like that's the reason why we can't get inflation down further. The core will not come down. And the only way to get the core down at this point, which really, I mean, I don't care what anyone says. Out of the 7 out of the 8 times that the yield curve has inverted, we've gotten a recession. And the one time that it hasn't happened yet, because that's in this inversion that we're talking about right now. I think that there's a good chance that the only way that they get that core number down is if they keep rates elevated long enough. But with that comes an absolute collapse at some point, whether capitulation of retail, of consumers in that regard, or we're going to see something break in the system just because, we talk about this all the time, but there's just a big liquidity crunch that is coming our way in 2024. So I think that the Fed is in the most tricky place right now. They kind of put themselves there, but I think they definitely did over tighten. But the problem is by over tightening, it still wasn't enough to break this shelter and also a lot of these other expenses that are keeping that core rate so elevated for the time being. So this is a really fucked up place, and this is just asking for. I think we're in a recession now. I'll just say it right now, but I think that there's something that's going to have to break, and we could see rates being cut post collapse or post break in the market. I think that's what the most likely scenario is moving forward. I think the numbers are fudged too. I mean, we're going to find more revisions moving forward, but this CPI data did not get me excited.
Everyone is assuming that we're getting this soft landing.
We've never gotten one once in history, just so everyone knows.
I don't believe it for one fucking second that we're getting a soft landing. Like, just open your goddamn eyes. Like, yeah, we're heading into an election year. I don't give a shit. We're heading into a Bitcoin halving.
2000.
I don't give a shit. Like, to just throw every piece of evidence out the window because it's an election year and because the Bitcoin halving is taking place, like so many people are doing, is just burying your head in the sand. And that is not how you want to be in the markets. I'm sorry. Like, if you want to be a very passive participant and not buy and sell stuff and just hold and slowly accumulate, okay. But if you're an active market participant and you aren't weighing the very real possibility of a recession happening and we're getting a hit in the market, then you need to figure the fuck out what you're doing because you're looking at this all wrong.
I sent you that video. I don't know if you saw it or not. You and House about Jeffrey Snyder when he was talking with Macro Alf. It's a great video. I'll tweet it out again later today so everyone can see it. But it's talking about the yield curve inversions and how we see the lagging effects in the markets. And Jeff Snyder was doing a really great job of explaining how in 2006 we realized, oh, we're kind of in a fucked place. And then all throughout 2007, markets went up and no one really expected anything bad to happen. It's like, oh, well, we didn't get a recession yet. That means we can't get one. It's kind of similar to where we are right now, guys. We know that I think November 2007 was the height of that. And that was literally when we entered the recession. And again, we didn't find out from the Economic Bureau whatever the bureau is that, announces whatever recession we're in. It's always delayed. We didn't find out we were in a recession in 2007 until 2009. So it's something that we have to keep in mind here. The markets are just feeling that, okay, we haven't got a recession. This soft landing is possible, even though it's never happened in the history of fucking the United States economic markets. You can argue in the 90s that we had kind of a soft landing, but not under the same constraints that we currently are, right? We didn't print this much money. We didn't put two Band-Aids back to back, 2008 and also 2019, and just kick the can down the road as long as we could. Now we're seeing even one of the worst things in the world, which I always talk about, is global financial markets are absolutely collapsing. We talk about Europe's property market. That looks like shit. Thank you, Germany, because you're aiding in that. And then we look at China, which is, that's just chaos, guys. The
Canadian housing market is terrible. We're seeing a huge rise in delinquencies of mortgages here in the U.S. Like, it's really bad. And like, we've been talking about this for a while, and we're not going to victory lap it because this is going to negatively impact so many people. And I'm not going to fucking celebrate that, but it's fucking scary when you really look at it and see how many people are going to be adversely impacted by this. Like, and we're just going to keep being referred to as the guys who think the sky is falling, and that's fine. Like I'll wear that that proudly, because I think we're really on this. I think we're fucking right. And like, it's just too many people. And let's talk about crypto for a second. So yesterday, I was in Vegas over the weekend. I had a grand old time, great time, fantastic stuff. And I like, occasionally I would check Twitter in between hands at the poker table, and I saw people tweeting about crypto crashing and the prices going down, and like legitimately looked like they were starting to panic, like for real, not like joking around kind of a thing. And I'm like, oh shit, I should open up CoinGecko and see what the prices are of everything. And they weren't really down. It wasn't that bad. It was ETH still around 2,200 at the time. It was Bitcoin still around 42K at the time. And I'm like, oh boy, if this is how people are acting now, what's going to happen when we get a flash crash on Bitcoin, that first big crash down to like 35K, or when ETH goes down to 1,800? Like, I think people have convinced themselves and have told themselves this narrative in their heads, and their perception is we're back in a bull market. Every influencer out there who doesn't know fuck all about markets has told me that next year is the year because of the halving and all these moon cycles and blah, blah, fucking blah. And so they see a red candle that size, and the immediate thought is, oh shit, just you fucking wait. Like, I think that so many people are about to get a very rude awakening. They've gotten it in their head, and the mindset you have right now is going to dictate your actions in the coming it always dictates your actions, obviously, but in the coming 6 months, your perceptions you need to be very fluid with how you're viewing this market. Because I think that as soon as people are getting comfortable, people are getting fat and happy because they're expecting to see Bitcoin go to 100K with this ETF approval. They're expecting ETH to go back to 4K. They have all of these ideas in their head of where crypto is going to go, and it has to go here because of the halving and because of the election year and because this fucking influencer told them so. And guess what? That's not how markets work. That's what I think about the state of crypto right now.
I agree. And I mean, you're definitely more animated than I can't top that, but I completely agree. It's so funny. And I keep telling everybody this, and they're like, well, you're a fucking idiot because you're not in the market. You could be trading shit coins. I'm like, do I really want to be buying shit coins? No, I don't fucking care about shit coins. They're going to be here in 2 fucking weeks. And sure, they can go up 9,000%, but we're talking about liquid markets. And that might be the fucking biggest indicator of why you see price move real quick, right? We're talking about something with extremely low volume, and then just a huge amount of money comes in one period of time. It's easy to manipulate the markets in both directions. Me and House were talking about this yesterday. But right now with crypto, I mean, everyone's talking about this Bitcoin ETF. I'm going to tell you something right now, and no one believes me. The Bitcoin ETF will not be approved until Tether and these other stable coins are regulated or out of the system. We know this. I mean, BlackRock has specifically said this, USDC and USDT. The government does not want Tether having any exposure to that. And the funny thing about this is, and this goes back kind of into, the issues in China and Asia, it's like Tether's the main company, the parent company, iFinex, is a Chinese company. If they're having issues there, imagine what's happening with Tether if some of their treasury bills or whatever they own see some issues in China as well, right? So I think that people are underestimating the facts that this price is definitely pushing up because people do need to get out of the market. And at some point, this is going to break. Like, they're freaking out over 2%, 3% dump on the weekly open. I mean, that was nothing. That was really nothing. $3,000. I mean, Bitcoin was still in the 40s. I didn't really even notice that it dumped that hard until someone told me. But we got a lot more to the downside, in my opinion, heading forward. But you also know that Tether's printing money here. They printed money back when CZ was about to get indicted or whatever. DOJ wanted him. So this seems like desperation, and this is gonna absolutely just blow up in everyone's face, in my opinion. Me and House looked at the funding rates on Thursday, I think, and everything was red across the board. Everyone's just trying to make money, and they're just going to liquidate everyone until there's no bears left, and then this thing's going to absolutely pull because they know that's the top. So crypto is fucked. Let's get into some of the charts because this is we got a lot of shit to cover.
Yep.
So let's go into oil first because I think that's the one that's going to be really indicative of what's happening in the markets right now. Natural gas, oil. I mean, look at oil, man. From September, we got the little pump here when Israel and Hamas kind of kicked off, and then ever since, just declined, right? And that's from that move here to here. That's a 23% move since the October highs. I mean, that's just absolutely terrible. And that's kind of telling you what's going on. We have OPEC cuts that have happened. They're talking about doing more production cuts, and yet the price continues to go down. Why? Because people just are not, that demand's just not there. And again, we know that crude oil just as well is important for manufacturing, and manufacturing just in the absolute shitter, not just in the United States, but globally too. So guess what? That's not going to help the price of oil either. We're in a really sticky place right now. When I look at this tells me that, we were very close to hitting $67 today. We were at, I think the low was 68.24, and it was just dumping like crazy today. I mean, just itself, it's 3.71% down. I don't think that there's a scenario that by next year, Christmas, next year elections, that we're not looking at gas under, 185 at the pumps and stuff like that, in the United States. I think that's a very real situation. People might think that's a great thing. Politicians might tout that as a great thing, but we know why it's going to be $1.85 or less. It's because demand is just not going to be there, right? And it's funny because if you lower the price of oil, that is going to actually increase the the amount of demand for it, because people will start buying gas at certain levels. You'll start seeing manufacturing pick up in that regard. That could really help the economy. However, if they continue to try and manipulate the price, OPEC and a lot of these other organizations, to get this price elevated artificially, then that's not going to help anyone. There's just a huge amount of supply of oil out there right now, even despite their cuts, and the price is just going down because nobody needs it right now. It's a really fucked up thing to say, but hey man, I don't think that we're too far off. If we look back, where is it, 2008, we saw a massive tail off to like $35 a barrel, I think. Yeah, I don't think that we're too far off from this scenario, right? This went higher than we expected. Obviously 2008 is a very different situation than 2023 when we talk about global issues, talking about wars and stuff like that. But you could see that down here. I mean, we had a little bit of a bounce. I mean, $35 a barrel, that's possible if we end up going into a recession. I don't care what anyone says. That's going to be a very scary thing, and this could honestly be the sign people should be taking a look at, other than the bond market that tells us, hey, things are not as great as the future outlook is not as great as people are anticipating. So that's one thing that we need to keep an eye on. If we just take a look at, what do we want to look at? So let's take a look at the dollar real quick, just because CPI data loves to fuck the dollar. It just always does. Even if the data is semi good, semi bad for the dollar, it just says, nope, screw you, goes all the way down. We can see that kind of happened today. We went all the way down to 103.476. We're at 103.809, and obviously we need to come down on the daily, but the dollar is holding really strong in this like 103.5 to 104 area. Hasn't broken below that. It's not back in that parallel channel, and this parallel channel is bullish, and I don't care what anyone says. That's a bull flag. We're coming down here, and then it's going to break out to the upside. Could we come back and test this lower? 100%. But if we look at this on the daily, it's extremely overbought on the daily. It needs to come down. I'm hoping that the stochastic RSI starts to reset so that we can kind of see that moving forward. But if we look at the weekly, all the way down, where else are we? What else are we? Someone just texted me that they bought VeChain, so I gotta respond to them after the show. But guys, I'm not buying any crypto, just so everyone knows. Here at the bottom, there we go. Completely oversold. We got to take a look at that stuff on the dollar when we're looking back. Things that we need to keep an eye on. The euro, 100%, extremely overbought in the monthly. I think the euro and the dollar are going to switch. We're going to start to see that come to parity. The yen, very interesting. This obviously broke down, but now we're kind of very close to being back in this parallel channel, right? I mean, we're right on its ass. We could get rejected. Very possible. However, we could also just pump into this and we could just continue in this pattern. I think it's very possible. I think Bank of America was saying that 155 to 1 is probably the Japanese yen to the US dollars, their outlook for it. I think that's very reasonable. But we can also see if Japan kind of blows up, because we do know that there is a lot of Chinese exposure in Japan. There's something to keep in mind moving forward with that. Other than that, nothing too crazy. We can see that the treasury yields are coming down a little bit today. They were a lot lower a few days ago, but obviously it seems like people dumped the bond market for equities. Take a look at the last thing, gold. Gold looks like it's oversold on the daily, so it might have a bit of a pump here. But if we look at this on the weekly, extremely overbought. I think that this is going to break down from this parallel channel. I think there's a good chance that we could be testing, 17s, at least 19s, like low 19s. I think 17s is very possible too. So it's something we have to keep an eye on. I'm not necessarily too concerned that this is going to continue pushing up just yet. I think there's definitely going to need to be some type of fear in the market that's going to drive this, or uncertainty. I'll say uncertainty because that's when gold does really well. So even if there is a market crash, say the VIX decides to go above 12. Oh my goodness, someone keeps texting me. If the VIX goes above 12 and the market decides to crash because it's like, oh shit, the VIX is going above 12, then maybe people flock to gold. Joking in that. I'm joking there, but VIX lowest it's been since January 2020. What the fuck's going on with the VIX, guys? Is it down only season?
I guess so. Let's go to crypto. Let's move through these, and then we can wrap it up for the day. We'll have plenty to talk about as well tomorrow with Jerome Powell speaking, but let's do a quick look through Bitcoin. I want to look at ETH, and then I want to finish it. Actually, if we can do Bitcoin, ETH, and then Avalanche, that would be cool.
Oh man, Avalanche, what a Ponzi. Yeah. So we were just in this parallel channel.
It's only a bad Ponzi if you're one of the last people to get in. Okay, if you're still early to the Ponzi, it can be profitable.
Yeah, we like early Ponzi's. I'm just kidding. I don't like any
early stage Ponzi's.
But with this parallel channel, we broke out of it to the upside, and then we broke above the macro one, and then we broke right back into it. Do I think it's very possible we can continue to push up from here? I think it's possible just because we do know that it's liquidation season. We talked about it yesterday. I'm not surprised that Bitcoin is still in the 40Ks. That move to the downside, if we see it on the weekly, is a really good move, right? This weekly candle, this is the first weekly candle that we've seen in the red since, October 16th. So this is a better move. This is a move that we were kind of anticipating. Maybe it was a little bit of a liquidation there, but I think that there is possibly a little bit more room to the upside, at least trade up higher. Was that you?
Yeah, that was me. I forgot.
Okay. All good. I thought it was someone was trying to call me. I'm like, all right, let's see here. Yeah, so I think that Bitcoin, it's very possible that we still trade in the 40Ks. I'm not concerned that it's going to go below it. We do know that there is no support underneath this level, though. So if we do start to see anything move, I think there's a good chance we can move through a lot of levels that we kind of moved through on the upside. Like this candle here that we got on Monday, October 23rd or so. This weekly candle, we could just fly right through that and, absolutely do a bearish engulfing of that. There's a lot of things that if these supports up here don't hold, it's just going to be a race to the bottom. So very interesting stuff on Bitcoin's front. You wanted to do ETH, right?
Yes.
ETH, yeah. Still in the parallel channel. Nothing too crazy and this is the weekly again. And it's very similar to Bitcoin. I was talking about these ABC corrective patterns. We had a 5-wave move up in the bull market. I mean, this could be, ABCs go 5-3-5. So 5 waves to the downside here in our wave A, 3 waves up in wave B, and now we would anticipate 5 waves down in wave C. Now, I think that we could have something where we just go a little bit lower than the wave A. I'm saying, like I've been saying, $600 to $700 ETH is a level that I've been keeping an eye on. Now, with this, it's really interesting because how much more can we push up before we start to find absolute resistance? This is it looks like we got a bit of rejection up here around 24. Could we go up a little bit higher? Sure. Or could we just kind of consolidate slowly and getting up higher and higher to the point where it's just, finding resistance and we can't break above it? I think that's very possible too. We could also break above it and then break right below it, and it's an absolute fake out. Monthly, it's going to be extremely overbought. Come end of December, and we can see not even that. Ooh, what's that? Yeah, we can even see this on the Bollinger Bands that the jaws on the ETH monthly chart are starting to contract. So we would anticipate a move in either direction that's going to be pretty violent. I'm going to say that it's going to be to the downside. That's just me being a bear. But if we look at also the volumes are going down as the price has been going up. Stochastic RSI is at 89 and 74. I think this will be 90 and 80 or so come end of December into January. And it's going to be really problematic because I think at this point, a lot of people are buying the top of these moves. And if people are trying to long even every dip, it's going to be the dip that keeps on dipping. I'm sorry. That's what I think we're seeing for a lot of these big boys. And if these big boys fall, the alts are going to bleed too. Now, you wanted to talk about AVAX. Let's take a look at that. And then I just want to look at 2 exchange tokens that were stupid, crazy, very similar to AVAX and how much the price has shot up. But here's AVAX on the daily. Now, when you and I talked about this, I think a week ago or so on the show, we were talking about it was $26 a coin. It's not $26 a coin no more. Ponzi with the 37. Even higher, I think.
They didn't touch 38.
No, it didn't. Touch 42.
Oh my God.
I hate this market so much. But yeah, I
know.
mean, what can I say? I just hope that this is an absolute red avalanche on the way down. Hope everyone liked that joke. But yeah, AVAX avalanche, this is nothing but a bunch of snowballs, if you ask me. Yeah, I mean, it's a really good pump. I think people got really excited. I'm not dissing AVAX at all. I want to get a bag of AVAX at the bottom, but we got to be shitting bricks and then eating them if this fucking price just going straight up. I mean, look at how it just means like you probably shouldn't eat the bricks that you shit.
Okay.
And in other words,
sometimes these sayings of yours just don't really hit for me, but I get it now.
Everyone in the audience loves it.
I'm sure they do.
Yeah, man. You need a stupid guy once in a while to say some words of wisdom.
You're the smart. I'm the one who does the loud reactions and gets all dramatic with it. Anyway, let's finish this up.
Yeah, but I'm the guy who's just bullish on the dollar all the time. How fun is that?
That is
yeah,
a lot of fun.
This is fucking. I mean, it's just you're insane to think that there's not going to be any back test to this, right? And the fact that it shoots up that quick, it's gonna fall through, and it's gonna try and find support somewhere. I mean, where do we have support on this? Maybe $31, 31 cents. Fuck, I wish. $31. You can look at $22, just a level of support down here. I mean, you can come down to, let's say, 14. And if none of these hold, $9, you're possibly looking for a new low in this cycle. And I think that's very possible. I mean, I have mine all the way down here at $3 to $5. That was before this pump to the upside. So I got to adjust that a little bit, but I don't think anything has been broken yet. I mean, even if I'm looking at this as a 5-way move down, it's a shitty 5-way move down just because there's so much consolidation, very similar to Chainlink for months. But I think that as long as we don't go higher than $52 a coin, then there's a good chance that we still have to put in a lower low for the year. So I'm really interested to see how this plays out. I'm not getting bullish by any means up here. Even if it goes to $52, I don't care. I'd rather just hold on to my cash and buy it if it drops, because when this market moves and there's no test back down, that's a very scary thing. That's not a market I just personally don't feel safe investing in. Now, BNB, we're just gonna go through this real quick. You can see that it pumped like fucking crazy over the past 2 days. I mean, this is up yesterday 2.75%, today up 3.33%, and we could see that it wicked all the way down to 228 yesterday, and now it wicked up to 257 today, with 254 being the current price. A lot of funny stuff going on over there. And again, as the market's dropping, the exchange token's going up. That's fishy to me, 100%. If we look over at KuCoin, I mean, this is probably the most aggravating chart, I think, out of all of them for me. And that's just because who the hell is using KuCoin after KYC? And why is the value of this token going up? Probably tells me that there's insiders or exchanges that have a lot of this token that's probably want to get out at a little bit of a higher price, because once that KYC hit, we saw what happened. I mean, KYC hits, I think, right around here. And we see that it dropped from about 48%. And now from the bottom of that KYC dump to where we currently are, it's a 269% pump. So it's funny when you see the exchange tokens pumping, you see altcoins bleeding out. And again, that's why I think that we're in a very weird place right now. People like to say that crypto is decentralized. It's a lot more centralized than you think. There's a lot of people who are behind a lot of these exchanges, and they have a lot of equity in these companies. So if they paid them out in any of these tokens or anything like that, they probably want to get out at the best price possible if they see something bad, coming. We've had a great pump in October, November, even in the beginning of December. Question is, how sustainable is this? To say anything, BlackRock doesn't even think the TradFi pump is sustainable. I am going to tell you this from a guy who said that Binance was going to collapse months ago. I don't think this is to be sustainable either. It takes time, but I think a lot of these people definitely need to make sure that they got to find a way to exit that's not going to screw them over. And again, we know that even FTX that has a ton of Solana that still has yet to hit the market too. So I don't know. I'm not into this. I think that we are in a very, very scary place for the markets in general, but crypto itself, I think, is going to front run a lot of the issues that we're going to see going into 2024. And you're going to see how fast I keep saying a liquid, but how fast a market that needs liquidity is going to move off of no volume after being pumped nonstop. Once these exchanges are done and the back doors are open, I mean, it's retail. Fight for whatever pennies are left in the vault if you can withdraw them.
Okay. I think that is how we are going to end it for today. Excited to be back. Looking forward to tomorrow, hearing what Jay Powell has to say. We'll be going live after he's finished speaking. So keep an eye out for the reminder for the note, turn the notifications on. We'll tweet out, a little bit of a heads up there, but expect it to be about half an hour later than usual because we know that Jay Powell likes to speak and we are going to be listening and the markets will be reacting. Have an awesome day, everybody. Appreciate you being here with us today. If you have not already, like, subscribe, comment, share us out on social. All of those things are greatly appreciated. Have a great day. Stay safe, and we will see you next time.
Take care, everyone.